Hello and welcome. You're to Buy Now, Sell Now on ET Now. I'm Srishti Sharma. With me is Cheryl D'Souza. Cheryl, what a recovery that we are witnessing on the benchmark indices, especially Nifty 50 recovered almost 160 points from the day's low.
Absolutely. A very good morning to you, Srishti. In fact, there's better picture when you look at the broader markets. There you go on your screen, 1.7% coming in for the mid-cap index from the day's lowest point. Benchmark indices also seeing good recovery. Let's take a look at small cap index because I believe the recovery there is much sharper, approximately over 2% of recovery coming in from the small cap index. There you go, 2.6% off the day's lowest point. That is your small cap index. A couple of names that are actually also lending support. First up, it has to be Reliance Industries because that one also has seen a recovery over the last 15 minutes from the day's lowest point, and that's actually aiding the Nifty as well and making sure the Nifty is also recovering in trade today. As you can see it on your screen, at the day's highest point, that's Reliance Industry seeing an uptick of about 2% from the day's lowest point. Take a look at Vedanta. That one also seeing good recovery in trade. You have Hindalco, NMDC, Tata Steel. All of these names are now actually recovering in trading session. Over in the global market, you have the price of aluminium, nickel, as well as copper that have actually shot up on back of that restrictions coming in on Russian metal. So it's also rubbing off on the metal index. Good recovery for the metal index as well. Even oil and gas space has seen a good recovery from the day's lowest point. Take a look at EPCL, HPCL, IOC. They've recovered from the day's low. Also GAIL and IGL also. They have seen a good recovery from the day's low point. So yes, now you can see some sort of a recovery creep into the markets, Srishti, and now the picture is not looking as bleak as it was kickstarted for trading session when you saw a knock of approximately 1% or so on an intraday basis when you talk about the benchmark in the season trading session.
Well, yes, Cheryl, thankfully the recovery is quite smart, especially in the broader market space as well. And if you look at the breadth of the market, that is also seen to be improving slightly. Other than that, a couple of more counters to highlight is one of the counters is Exide Industries, wherein a brokerage note coming out on this one. 425 is the target coming in from Morgan Stanley, and we have seen a good jump up of around 4% in this particular counter. We talk about Aster DM Healthcare, that's also seeing good gains, 7% uptick on this counter after dividend that is being announced over of 100 rupees, and that was actually a little bit of the anticipated lines, and we are seeing a jump of around 7% in this particular counter as well. But with this, viewers, let's move on and let's focus to the buy now, sell now lens as well. And today we're going to be focusing on the power space because the government has directed all gas-based power plants to operate in the May and June amid an anticipated increase in the demand during the summer months. Now, this is the first time that the government is using Section 11 of the Electricity Act 2003 for gas-based plants. Let's go across to my colleague Anisha, who is joining us to give us all those details related to that. Over to you, Anisha.
Yeah, Section 11 was already imposed for coal thermal power plants because the demand was quite high for the last 9 to 12 months. But anticipating summer demand, the government has gone ahead and imposed Section 11 for the gas-based power plants as well. What it basically means in layman terms is that the power plants will be mandated to produce power as and when needed, and they will ensure that the fuel supply and other things are also taken care of. In terms of the need for power, they will be told 14 days in advance, and 50% is what is the guaranteed offtake that the government is talking about. Of course, tariff is something which if is already set in the PPA, it will go that way. Otherwise, it will be decided by certain rules and committees. So that's also pretty much put in place as to what the tariffs are going to be like. Now, in terms of the key beneficiaries for this, IFL believes that this is a move to de-risk its reliance on coal units to meet the peak demand. PLFs can rise for companies like Torrent Power. There would be improvement in terms of volumes for the likes of GAIL, PLNG, GSPL, etc. as well. If this does get extended, because for now it's only applicable for 2 months, that is from 1st May to 30th June, but if it does get extended the way it has got extended for the coal thermal plants as well, every 1 million metric ton of incremental LNG imported will mean 5 to 10% EPS upgrade for the likes of GAIL, PLNG, and IEX also stands to benefit because there will be higher exchange volume. Specifically for Torrent Power, the stock is coming under pressure today. This is incrementally positive news for the entire sector, but the reason Torrent Power is coming under pressure is because Street was expecting there will be higher merchant tariffs this summer, given the fact that the supply and demand mismatch was strong. And Torrance Power's spare capacity will be utilized for that higher merchant power tariff. But that is not expected to happen now, and that's the reason the stock is coming under pressure. In fact, if it does get extended for the full year FY25, the EPS can get upgraded by 12 to 15%, at least at the PBT level. But for now, it's just that there will be this near-term weakness, because this will mean that the power will move away from that high merchant tariff rate to this Section 11 rate, and that's where the stock is coming under pressure. But IFL believes the near-term weakness is a buying opportunity. So we're watching out for this stock particularly, but overall a positive news for the power sector.
All right, thank you so much, Anisha, for actually putting into context that particular development over the weekend meant of the entire power sector. And to talk more about the power sector, what's the way forward fundamentally as well as technically, we have Kush Bohra who's joining us on the technical front, while we have Vivek Karwa joining us on the fundamentals. Very good morning to you, Kush, as well as Vivek. Thank you so much for joining us on ET Now. And Vivek, let's come first to you. A recent move coming in order to amp up the electricity supply, like the way how Anisha mentioned, it is incrementally positive for the power sector. But what's your take coming in on the entire power sector as a whole?
In fact, whenever we have spoken, I have been bullish on power sector, if you recall. So I continue to be bullish. Yeah, this kind of measures, gas related, this is going to be only for summer, which is say 2-3 months, and after that again the would go the normal way. But longer term, the power consumption is set to increase in India, and I feel that maybe 5 to 7 years, the consumption from here, whatever we are consuming today, should already double, maybe by next 5 to 7 years. So there's a lot of scope in power segment, and I am quite bullish on the power sector as a whole. And going forward, even EV vehicles is going to play a big role in power consumption. So altogether, yes, I'm quite bullish.
You are bullish on the power sector. Then which are the stocks that you're looking at this point in time? Large cap, mid cap players?
I would right now go with NTPC and Power Grid if you look for next 5 years. So both the stocks look quite reasonably priced even now. And the way NTPC is again going into hydrogen, and their green IPO might come maybe next few months. So they are really dynamic and going for good. So I feel NTPC and Power Grid both should be a buy even at these levels.
Okay, NTPC and Power Grids are the top recommendations coming in from Vivek. But Kush, coming to you, good morning first of all. And from the power space, a lot of these stocks are powering ahead. But at this point, any of the stock that is on your radar?
Hi, Srishti. First up, a very good morning. Well, I agree with Vivek here completely. I have to pick 3 top sectors for the year. Power will feature in them. Now, what happens is that there is the entire universe that gets affected. There comes a secular time when the entire sector starts to do well. Actually, is happening with the realty space. If you see home finances, developers, home improvement teams, all of them are doing well. Similar stories actually going on in the power space for some time now, at least a couple of months, if not longer. So, I think almost everything in this space will, of course, you still have to be a little selective, but this is, a sector where you still have to, have a chunk of your capital parked in. Now, said, a couple of names have already been discussed. I think Torrent Power, Tata Power, they've already been discussed. REC, NTPC, Vivek already mentioned. Let me bring in a slightly different, flavor. There's a stock called GPIL, Godavari Power. Now, this is a stock that we've had on our radar for some time now. As a disclaimer, it's been an recommendation to our advisory clients also fairly recently. Transformers and rectifiers, TRIL. Although it's too overheated territories now, but any kind of declines, and you could consider these. So a slightly different flavor, but Godavari Power, transformers, rectifiers, and if I can add one more, then NLC India. These are some of the stocks from the power space we have on our radar. And as I said, this is perhaps a particular run for the power space. A lot of different components, a lot of parts in this space, are doing well and will continue to do well for the next 12 to 18 months time frame.
Right, so those are the picks coming in from both of our experts, while it is NTPC Power Grid coming in for Vivek. For Kush, it is Godavari Power, transformers and rectifiers, as well as NLC India, and this is particularly in the power space. But on that note, we slip into a break on this edition of Buy Now. Now, when we come back, we'll start taking your query. Viewers, don't go anywhere. All right, welcome back. Watching Buy Now, Sell Now on ET Now, and as we speak, steady recovery underway in for the benchmark indices. At least the Reliance Industries lending that support for the benchmark, recovering over 2% from the day's lowest point. Reliance Industries, and that's the 6-month chart coming in for Reliance Industries for you. But let's talk about all of your stock related queries. We already have a lot of them pouring in, and remember, viewers who are new to the show, remember you can write to us and tell us which stock you are looking to invest in. If you're already invested in the stock, do mention the buy price, the quantity, as well as the time horizon. Along with that, do mention your name as well, and in that way we will actually take your query to our experts. Our experts today are Kush Bohra on the technicals, while we have Vivek Karwa on the fundamentals. Once again, good morning to both of you gentlemen, and let's kickstart with taking all of the stock related queries. They're already pouring in, and the first query is coming in from a viewer who is 76 years of age, is a long-term investor as well. He has Force Motors at a price of 1,600 rupees per share, as well as Tata Investment Corporation at a price of around 4,100 rupees per share. I believe the gentleman's name is Dharmaraj Raja. So, Vivek, what's your take coming in? He's a long-term investor. He's a senior citizen. He's holding Force Motors as well as Tata Investment in his portfolio. What's the trajectory coming in for both of these counters?
Now, both the stocks are good. Definitely can be held on for long term. But at 76, you don't know the definition of long term. Seriously, you're talking about 5 years, 10 years, 15 years, 30 years. No idea about that. But yeah, if you want to continue holding it till your late life, yes, do that. So both are good stocks.
What's also key to know, Vivek, is the fact that he's made a healthy set of profits on both of these counters. 600 being a buy price for Force Motors. For Tata Investment Corporation, the buy price is 100 rupees per share. So, would you advise him to continue to stay put and not book out?
Shiril, you are rubbing salt on my wound. I had bought Force Motors initially maybe at 300 and happily came out at 1,500.
Happily. You were happy then.
Then I was happy, but after seeing the prices now at 8,600, you know how I'll be feeling.
Point taken. But for now, it is a in at least for the gentleman who's written to us. So one good profit, and this is definitely the power of compounding and holding on for the longer term, isn't it, Shrishti?
Well, yes, absolutely. And we keep seeing a lot of these senior citizens also writing to us, and one such is Waini and Kush. The next query is on Adani Ports as well as Adani Power, and he wants to make a fresh investment in any of these stocks. So what will be advised between Adani and Adani Power? Any stock that you like for a fresh investment right now?
Well, I think I'll be contradicting myself if I didn't say Adani Power, at this stage was a good bet after the monologue that I gave on the power space. So, on the whole, actually, Adani Power is doing well. If you see, these are the two stocks that we've had from the Adani stable. We've been, constructive on cements is a slightly different story. But other than that, Adani Power and Adani Ports, both these stocks have been on our radar for some time. Both of them warrant a fresh look, in terms of a fresh allocation also. So my suggestion would be, if they're open with the idea, then they could perhaps consider parking 50% capital in both of these stocks. The setup is constructive for both of them, and the kind of move that we've seen, only warrants higher levels, from here on. So my suggestion would be a 50% allocation in both these stocks.
This query is from a viewer who's written to us for the first time. It's coming in from Rudra Gaura, writing to us from Hubballi, and he has Adani Wilmar at a price of 125, 30 shares of Paytm at 794 rupees per share. He wants to know whether he should stay put with them or book out with a loss. Kush, take.
If the view is, let's say, medium term, then my suggestion would be stay put with Paytm, because the kind of tracks that we saw, seems to be, that fall seems to be, over. The stock is stabilizing, at these levels. Risk rewards actually quite favorable, at the current juncture for a fresh buy. But since he's already got a position at a much higher level, I wouldn't recommend it just yet. Some more momentum, maybe beyond 400, 410, they could consider, further. So Paytm is a hold. As I said, the holding period could be perhaps 6 to 12 months from here. Adani Wilmar also showing some traction and is attempting a rebound, but seems like stock could perhaps see a bit of a consolidation going forward. My broad range in this stock is 330 to 365. If it breaks below 330, the suggestion would be to exit.
Moving on, and next query that I have, Vivek, is on a sector that has underperformed majorly, and this is on the FMCG space. Vincent is looking to make a fresh investment in any of the two majors. He has stocks like HUL as well as Nestle on radar. So, would you advise to go ahead and make an investment in this sector, and amongst HUL and Nestle, any of your recommendation, any of the stock that you like?
HUL was maybe a few months ago, not few months, possibly a year ago, trading at almost 80, 90 PE levels. And post the stock has corrected. So this generally happens when you end up buying even good stocks, expanded PE, you sometimes get stuck badly. So that is what happened in HUL. And now it is trading up at around 50, which is, say, on par with most of the peer group. At these levels, yeah, you can, more than Nestle, I would prefer it. You can slow and steadily start entering the stock. I think the stock should bottom out somewhere over here. And you got to give it time. Now, the factors which would now play is the monsoon. If monsoon is really good, FMCG also should do good from here. So at these prices, yeah, slow and steadily, you please enter. Don't go in one go. But yeah, in parts you.
Coming back to you, Vivek, this one is coming from Subramanian. He's writing from Chennai. He has DCB Bank, about 120 shares at an average price of 128 rupees per share. He wants to know whether he should continue to hold on to it, to switch to Federal Bank or City Union Bank. Do you think that this strategy makes sense? Moving away from DCB Bank right now, he's making mild bit of losses right now, and instead look at Federal Bank or even City Union Bank, which have actually seen good run up.
See, going forward, what is going to happen is all the small banks would cease to exist, will either get bought over by bigger banks. So both DCB and City Union at these levels, yeah, you can definitely hold on. But I somewhere find that if you really want actual growth, you should go with big wigs. And even at these levels, stocks like SBI, if you look at valuations wise, it looks quite, I say, cheap compared to City Union or DCB. So I think that strategy would be better. But still, if you want to switch from DCB to CUB, I would vote for that, because I feel CUB is much more better bank than DCB, and CUB is again a Chennai headquartered bank. Just maybe 200 meters from my place is the headquarters.
Vivek has a close eye on all the southern India-based companies, and especially Chennai. So you can write specifically to us if you want to know about any of these companies. But moving on to the next one, the next query that I have, Kush, is coming in on Syngene, and Gaurav from Bangalore actually wants a short-term view on Syngene. He's holding 200 shares from a price of 760 rupees. A good move that we have seen on Friday, and today also onto the green. What are the short-term targets on this one?
So incidentally, the near-term target does come the price that he's bought. To round it off, it's actually 770. That's the level that we're looking at. The stock did make a high around February, around those levels. Even in the last week attempt, the stock came really close to those levels. On the whole, if you ask me, the stock has made a very firm base at around those 665 to 680 kind of levels. So as long as those levels are held, my suggestion is to hold on to this one. The momentum is positive. It's only today that, along with the market, that the stock actually turned negative. But other than that, the stock is on the recovery path. Moving the stop loss higher as the stock moves up. There's a very good possibility that in the coming month or so, maybe sooner, the stock could touch 770 and move higher from there on as well. So hold on to this one. If you want a closer stop loss, then 710 is your level.
Coming back to you once again, Kush, this one is coming from Alok, writing to us from New Delhi. He has about 10,000 shares of Zomato, which he's purchased at 129 rupees per share. As well as he wants to know about Adani Power, he purchased at 500 rupees per share. Wants to know 1 to 3 month target for both. I know you spoke about Adani Power, but in case you can reiterate on that.
Sure. So Zomato is a very clear hold. Congratulations on the fab and more so for holding on. Now what you can do is perhaps ride this wave that you've been doing, up until now. The stock is closer to overheated territories, perhaps even, entered the overheating territory some time frames. But then that's how momentum rallies work, right? So no need to book out early. What I would do is I would have a trailing stop loss of 125 to 180 for Zomato and continue to ride. Good chance that the stock could touch 215 and higher levels also in the 1 to 3 month time frame that he's asking for. Adani Power, the stock is in a bit of pressure in the near term, but as I said, on the whole, the setup looks fine. Even today, if you see the support that the stock has taken is close to that crucial level of 560, 570. So hold on to Adani Power. My near-term target on this one first is 625, and once that is taken out, 50 plus levels are also on the card.
All right, moving on, and Vivek, coming to you to have your take and any of your top recommendations from the EMS space. What we are seeing is that a lot of these brokerages are getting bullish on this one and initiating coverage as well. One such brokerage house is Kotak Insti, where they believe that there is a large opportunity and multiple wins. And Akshay wants to know any good stock for a long term within the space where he can go and make an investment for the long term. Any of your stock from this sector?
Okay, Shristi, first of all, see, idea is to make in the markets. And just now Kush was speaking about Zomato. I feel if you are holding it for next 3 to 4 years, we will see it at 500. So that's my gut feeling over here. So Zomato for 500, you should surely hold it on and buy it. Now, when it comes to EMS, I think Keynes technology looks the best. You should slowly and steadily keep accumulating this stock. Valuations surely are, say, more than stretched, I should say, at 110 PE levels. But the way companies working in both defense, aerospace, I think this company would still continue doing well going forward. So enter it slowly and steadily because valuations are quite high. But long term, next 2 years, 3 years horizon should actually be very big.
Next one is coming from Sindhu, who's writing to us from Abu Dhabi, and she wants to know about Tata Motors. She's holding about 9,000 shares at a price of 1,010 rupees per share. Wants to know in the next 1 week, will the stock reach 1,050 on the charts? What's the take coming in on Tata Motors? No doubt her buy price is pretty elevated as well, coming in for Tata Motors, isn't it?
Is, and see, it becomes a little difficult to pinpoint that whether in a week's time the stock will indeed reach that price point, as you'd understand. What I can say is that the trajectory for the stock is bullish. The stock's actually been doing well, and for me, the stock is a buy on dips kind of a candidate. Now, can the stock reach 1,050? Of course, I mean, there's a large possibility that the kind of momentum that the stock has, it can reach. Will reach? I mean, of course, remains to be seen. But if the time is not really constrained, hold on to this one. As I said, the overall trajectory is bullish here. I wouldn't mind adding more if the stock actually slips to those 980 levels also. So for me, on the whole, there's a bullish trend in motors will continue. 1,050 incidentally is my first target, and once that is taken out, looking at 1,090 also.
All right, that's the take on Tata Motors. But moving on, and Vivek, what's your take on Yes Bank? A viewer named Wali, who has written to us for the first time, is holding 11 shares of Yes Bank from a price of 16 rupees 70 paise. Good to hold for the long term, and any targets as well?
See, if you recall, I had spoken about the stock at around 30 levels, and I had said, please book profits or losses, whatever you have. So, and after that, the stock has again come to 24. Yeah, if you really want to with yes, open a current account. I have a current account there. Open a savings bank account. Don't buy the stock. So I would prefer. I'll give a big avoid on this. Earlier, even I had done the mistake of buying it, still in the portfolio. But yeah, it's not buying at this level. See, at even 24 rupees, this is trading at valuations of almost 70,000 market cap. Okay, now people, I see a lot of WhatsApp forwards wherein people predict at 100 rupees. So you're talking about what 3 crore market cap ka bank with profits of under 1,000 crores. That's illogical. So don't go with this WhatsApp forwards. Please avoid the stock.
Avoid is the take coming in on Yes Bank, and a firm avoid actually coming in on Yes Bank. Let's take another one, and this one is coming in from Srinivas Joshi, writing to us from Dubai. PG Health, 50 share at a price of 5,000 rupees per share. He wants to know what should he do with the stock. What should he do with this particular counter, PNG Health?
And you said the buy price is about 5,000?
5,000
Sorry,
is
I
the,
missed that.
yes, 5,000 is the buy price.
Brilliant. I mean, first thing I would ask is where's the but other than that, I think continue to hold on to this one. There isn't a major dip or any kind of a major correction. I think these queries are more of a case study as why investing works. Continue to hold on. If they're looking to add further by any chance, then I think 15,000 perhaps is a good level to 500 to 15,000 is a good level to add more. No need to sell unless cash is a is a requirement at the current stage. Hold on to this.
All right, that's a hold coming in on PNG Health. But Vivek, any view on Reliance Infrastructure? Peter from Trichy wants to know, have the fortunes changed for Reliance Infrastructure? Anything positive that you are spotting out here? And can he make a fresh investment in this counter with a 12 months investment horizon?
I believe infrastructure story in India is quite good. Will continue to be good, and we have seen that 6-digit 11 lakh 11,000 crores odd allocation which was announced in the budget. So infra story is intact. But when it comes to buying infra stocks, I am always very skeptical. The way I said for Yes Bank, you please have an account that technology is superb there, bank services are good, but the stock is bad. So similar story in infra. Most of the stocks I find that should be great avoids. Now I think there was a court order a few days back. Reliance Infra was hoping that they would get some big amount from the Delhi Metro Corporation, which has been turned down by High Court. So I don't know how the story is going to play out. There should be a big avoid as of now at this levels. Surely I would not.
That was about Reliance Infrastructure and RIIL, RIIL, sorry, that we were talking about. And Kush, let me come back to you actually on that PNG Health counter. I believe did you talk about PNG Health or PNG Hygiene and Health? Because that is 15,000 rupees stock, while our has bought the PNG Health stock, which is above 4,800 rupees right now.
Oh, my bad. I think I then spoke about the PNG hygiene stock. In fact, that's the only one that's loading on my chart. So if it's the other one that, then I'm sorry, you'll have to give it a miss.
Do you have a view on PNG Health?
PNG Health is a hold. You should surely hold it. And if you look at the highs, it was at 5,600 odd levels and now 4,700. I think it's due for a bounce back again. A great company, products are good. Possibly, I'm not sure if Bonvita comes under this space because there was some negative news. But overall, the company looks good. You should hold it on.
All right, that's a coming in on PNG Health. But with this, viewers, it's time to slip into a very short. Don't go anywhere. We'll be right back to take more of the stock-related queries. So stay tuned. Come back to buy and sell now, and let's keep it going with all your stock-related queries. And Vivek, coming to you for the next query. This one is on Genus Power, where Mayank Saraf from New Delhi is holding 5,000 shares and his buy price is 250 rupees. Given the market cap as well as the order book in the smart meters, he finds this counter quite attractive. Any take on Genus Power? And he also wants to know, can he go ahead and add more at current price with the next 2 years investment horizon?
See, what I feel is you should hold it on if you already bought it. And if you're looking at buying a fresh, please go slow and steadily buy in SIP mode. Order book looks good. The company overall is also good. And the smart meter theme is going to play out really aggressively over next 3 years, at least 3 to 5 years. So overall, it also comes under this power sector. Now, what I feel is this is not the only company. There are other companies also in this space, and particularly from unorganized. I shouldn't say unorganized, but from unlisted space as well. But at these valuations, it looks very costly. The reason I'm saying go as SIP mode. And one negative news is promoters have reduced their stake. So that's a red flag for me. So I would be very cautious and buy it very slowly.
All right, this next one is coming in Lakshmanan, who is a senior citizen. He's 74 years of age, Vivek, and he has 75 shares of Asian Paints. He's a long-term investor, but he's not mentioned the buy price for his Asian Paints hold. But he wants to know whether he should stay put with Asian Paints or switch to something else altogether. And also, he wants to know in the hospitality space, which one do you think stands out for a long-term investment bet right now, given the fact that most of them have actually seen a sharp rally already, Vivek?
See, Asian Paints should be a hold. Again, the earlier question was from 76-year-old person and now from 74. So I don't know the definition of long term again, but if you really want to hold it and pass it on to your next generation as well, I think Asian Paint at these levels after the correction looks good. It was seeming that it would bounce back maybe 2 weeks before when crude was quite stable at 80 levels. Now suddenly after the spike due to this Iran war, I think there will be temporary dent in the stock again. So yeah, and again, that's not going to last forever. So please hold it on for long term. When it comes to hospitality, I feel Lemon Tree Hotels should be a good bet. The way they are expanding and the way they are signing up franchisees across the country, even small cities, I think this stock should really do well going forward. And compared to valuations of other hospitality and hotel stocks, I think it stands out. So Lemon Tree should be the best bet over here.
All right. Continues to like Lemon Tree Hotel, but moving on. And Kush, the next question from Girish Iyer, and he's holding MCX and presently at a loss in this one, holding 3,000 shares, and his buy price is 3,945 rupees. What could be done in MCX? And if you advise to exit this counter, then any other script, then he can make an investment or trade and try to have some recovery.
Well, MCX itself is not, bad stock at all. We saw a massive, slip from the 4070 kind of levels, on Friday. Then today again the stock is in pressure. But again, the stock had risen quite sharply too, from 3,200 odd levels right up until 4,000. So I think this is sort of a near-term profit booking that the stock is witnessing. On the whole, if you ask me, it's not such a worrisome move. I understand that he may have stuck at a slightly higher price, and the dent might then be looking. But other than that, if you ask me, the stock is actually quite on a very firm footing. 3,600 is a strong support zone. As long as that is held, I don't think there should be a worry from a near-term perspective, and the stock could very well reach 3,900, which is the buying price, and higher levels also. So I think all in all, 3,600 is a good level as stop loss. Hold on as long as the stock holds 3,600.
All right. Next one is coming in from Sayak, who's from Bangalore. This one is for you, Vivek. He has actually invested in all of these renewable energy or sort of power counters, which everyone is actually looking at right now. One is 2,000 shares in IREDA at a price of around 52.7 rupees per share. 50 shares at VRIDHI at around 1,465 rupees per share. He bought this split. Also, he has Gensol Engineering 100 shares at a price of around 890 rupees per share. Now, he wants to know whether all of them are worth a hold for a period of at least 5 years, considering EV and green energy boom in India. What's your take on all three of them? As in a portfolio, it makes sense to have all of these at one go.
If you really look at EV space as one of the trigger points, I think there are so many other stocks. Just talking about NTPC, which is again going into hydrogen. You can maybe not strictly, but you can put that also under space, because that is going to be alternate fuel going forward. So there are companies, I would not bet on very, very small companies because what happens suddenly is really, say, unsure over here. Stocks like IREDA after the correction, yeah, it tends to be a hold. I don't agree to a buy because the stock still looks costly to me. But if you really look at alternate fuel, I think Suzlon still looks good at these levels. And if you really want to play EV space as a thing, Tata Power, even Kush was speaking about it, looks quite good. Adani Power, all these companies are to be having good EV charging and whatever infrastructure you call it. So that is going to be in place coming years. So look at these companies instead of all chota mota companies.
Okay, that's the take coming in from Vivek. But Vivek, once again coming to you, because the query is on two of the companies we don't discuss much often. This one is from Sudeep, and he wants to make a fresh buy in Andhra Sugars as well as Ganesh Housing. Are they good bets for the next 3 to 5 years?
Shristi, at 95 levels, I bought Andhra Sugars a lot, maybe 10 days back, and some of my clients were asking me, kya le raha hai ye? But it's at 105 today. I think Andhra Sugar will go to 120. So you should do that. And as I said, disclosure, my clients have it and I too have it. So one thing. Now, don't go with the name Andhra Sugars. Sugars is hardly 10% business in the company. Rest comes from specialty chemicals and other businesses. So if you're buying other sugar, you're not buying sugar, you're buying other businesses. So keep that in mind. So it's a great stock, you should buy it. And the other one I forgot.
Housing.
Which housing, sorry?
Ganesh Housing.
I would avoid housing finance companies at these levels if you really want to take some risk. Now I'm saying it is a risk, but India Bulls looks better than all these companies. So again, that's a do or die kind of stock India Bulls. A lot of things are improving over there. The ratings are improving. Promoters are quite gungo. Business is doing well. So India Bulls housing finance looks as horse in housing finance companies. Other housing finance I'll avoid.
All right, taking this one from Sundar Raman from Mumbai. He's 66 years old. He wants to know for the long term whether he should look at buying ITC or HUL or both for the matter of fact. I know you spoke about HUL a short while ago, Vivek, but for the gentleman, he wants to know whether it makes sense to look at these counters right now for the longer term.
See, now again, long-term definition for 66-year-old, I am not sure. But yeah, if you're buying ITC for next 5 years, I think you should buy at these levels after the correction, because when the stock had quite high, I think it had gone till what, 480, 490 levels. That time I was giving a sell, but at 420, it's becomes stable. Maybe it doesn't move for next 2 years. In case the company announces certain demergers, particularly hospitality industry, the stock would continue doing well. So long term, yes, but short term, it might be stagnant here.
All right. Coming to you, Kush, this query is from Shilpa. One of the IT majors that she is holding is Wipro from a price of 538 rupees. After TCS, we didn't see any of these IT majors doing well, at least for today. But what about Wipro? Buying price is still quite far from the current market price. Is that a hold or exit?
Well, Wipro now is an exit. There's a brief while, about a couple of months ago where we were, bullish on Wipro. And from about similar levels, 450, 480, the stock did actually move higher. But then ever since, the stock's actually given way, not on a great footing now. If you look at, some of the key averages also, then the stock's actually below them. So for me, Wipro right now is an exit. In fact, the entire IT space might be, perhaps consolidating with a negative bias for some time. So a little caution is advised, at least from the big. Some of the stocks that we like here are, from the smaller space. Persistent Systems, is one stock. Then from the cash segment, there is KPT Tech. So if they do want to consider, then my suggestion would be to consider some of these. The larger names might perhaps continue to be under a bit of pressure for, a few months to come.
All right, this one is coming from Ashish, who's writing to us from Delhi. He has Traxon. He's bought this at a price of around 112 rupees per share, about 5,000 shares of this particular counter. Wants to know what should he do? What's your take coming in on this stock, Vivek? Traxon for you?
Sorry, Shril, I don't track the stock, so I don't even know what the company do.
Actually, this one is a recently listed counter. Actually, I'm not sure if you have seen the charts for this one either, Kush.
Well, as you said, the data is limited, but from a near perspective, it looks like the stock is taking a bit of a knocking. There's an attempt at recovery, so I think 85 is a good level. If it holds, then might down, but if not, then there's a possibility that the stock could slide further. So if 85 is also quite below the buying price, but that's the level that I'll watch.
All right. Coming to you, Vivek, query is from a viewer. He actually didn't share his name. I believe he's writing to us on his WhatsApp profile. Deepan is what I can see. He's holding SJVN from a price of 145. He's holding 700 shares. Any outlook on this one? Continue to hold on or look for better opportunities?
See, I'm okay with the power sector overall, and in power when it comes to choices, gas, as we spoke earlier, solar, as we spoke, and NTPC kind of companies. But water, I'm a bit skeptical. So SPN would be avoid. I think you should go with other power stocks, which we had discussed.
This one's come from Yuvraj, who's writing to us from Chennai. He has South Indian Bank, 3,000 shares at a price of 31 rupees per share. He wants to know whether he can buy more, average or exit, or switch to other bank for another bank altogether in order to book his losses. What's coming in on this one, Kush? South Indian Bank at a price of around 31 rupees per share. Makes sense to exit this particular counter?
Well, it would seem so. The saving is that his buying price is not too far away from the current price, so the loss may not be as deep. If you see the overall setup, the stock's actually reeling under pressure. Every rise being taken as an opportunity to sell. In fact, even the recent peak that the stock was close to 31, 31.50, which is the buying price, very close to the 100-day moving average of 26. So my suggestion would be to exit this stock currently. There are a couple of other names in this space that have been doing so, the likes of PNB, and if they're okay to move to NBFCs, Geo Financial. These are a couple of stocks that they can consider. South Indian Bank for me, at the current levels is an exit.
All right, that's the take on Geo Financials. But with this, viewers, it's time once again to slip into a very short break. Don't go anywhere. As we come right back in the last leg, we'll be taking your queries, rapid fire session. So stay tuned.
Welcome back. You're watching Buy Now Sell Now on E! Now. Let's continue taking all of his stock-related queries. This one is coming from Krishnan from Chennai. He wants to know whether he can buy Keynes Technologies at the current price. Fundamentally, we did hear Vivek give his views on Keynes actually a short while ago. But on technical front, do you think it's the right price to buy Keynes right now, Kush?
I'd wait for some time. After the high of 30 to 50, stocks actually been under pressure, very tantalizingly close to its 200-day moving average at 2400 levels. If that is broken, then it see some more downside. So for me, it's very tightly placed. So I'll wait for some time, and if the stock rebounds and does cross that 26, 26.50 kind of level, is when I would consider buying, at least from a near-term perspective. So for me, it's a wait and watch type.
Right, Kush, let me have your take on another stock related to exchanges, that is BSC. Vinod from Bangalore is already holding close to 700 shares from a price of 400 rupees. Sitting at good profits in this one. What will be advised and any targets to look out for? Kush, this one is for you.
Sure. So again, for the last month and a half at least, we've been recommending a buy on BSC. Even today, we've initiated a buy call on a BSC for the near-term targets of 3,000 and above as well. So for us, BSC is in a very constructive space. If you look at last month and a half, any kind of dip that has around has only turned out to be a buying opportunity. So that remains intact. For me, BSC is a buy. It's a very clear hold. Any tip that you get, incidentally, the today's tip that 2700, 2750 kind of should be taken as an opportunity to add more. So BSC for targets of 1,000 plus continue to hold.
All right, this one is coming Rohit, who's writing to us from Pune. He wants to know whether he should hold or exit NMDC Steel. He's holding at a buy price of around 64 rupees per share. The fact that it is just listed on the bourses after the demerger, I will not take this to you, Kush. NMDC Steel is the counter, and Vivek, what's your take coming in on NMDC Steel? 64 is the buy price.
As a whole, is a hold, Shiril, and I think NMDC also should do well from here. And overall, you can see aluminium is almost 5% up. Of course, there's not in aluminium, but overall metals pack as such looks quite interesting. So hold it on. NMDC Steel as well should be a hold.
Vivek, once again coming to you, Munila Raju wants to know about 3 of the counters where he can go ahead and make an investment for the long term. He has stocks like Hind Copper, Arcane Chemicals, as well as Kirloskar Pneumatic Company on his radar. So amongst the 3, any stock that you like?
Kirloskar Pneumatic looks good at these valuations. I think very, very small company. In fact, I had a big miss on Kirloskar pack as such. but even now, stock looks say undervalued compared to other. Now we were talking about infrastructure. So if you really want to play infrastructure story with a good company, I think this should be one of the picks. So Arkin, I'm not sure, but Kirloskar, yes.
All right, this one is coming in from Arunab Singh, who's writing to us. Wants to know about Divi's Laboratories, which is holding from the levels of 5,100 rupees per share, as well as TTK Prestige, about 10 shares at a price of around 1,200 rupees per share. He's saying both of these counters are now performing well in his portfolio for a while now. So he wants to know whether he should stay put with them or sell and look for some other opportunities altogether. What's your take coming in both of these counters, Vivek? Because Divi's as well as TTK Prestige, both of them have fallen off the cliff when you look at his buy price at least.
See, TTK Prestige after this fall lowered. In fact, again, this is a South Indian based company when it comes to TTK, and the household segment will continue doing well from here. And the products they are diversified into looks again promising for the future. So please hold on TTK Prestige. Now, when it comes to Divi's, see, overall the pharma sector has underperformed. If you look at last possibly 3 years. And that's the reason most of these pharma companies will that they have either not given you returns or given you negative returns. But what I feel is from here, the bounce back is overdue. So I am bullish on healthcare and pharma services for next, say, 3 years time horizon. So if you are looking at Divi's at these levels, yeah, you can hold on. At peak, yes, they were quite strangely valued. Now the correction has come. So please hold on. Both the stocks would be a hold.
That's a hold coming in on both of these counters. But with this, viewers, let's kickstart all your queries in the rapid fire session. And the first query is for you, Vivek. Do you like India pesticides for a long-term investment? Can Lalit Kumar go ahead and make a fresh investment here?
I see specialty chemicals, yes, but pesticides avoid.
Kush, Sushil wants to know Geo Financial. Can he look to buy this particular counter at current market price?
Yes.
All right. The next query that I have is coming in on GIC Housing Finance. Vivek, Amit Kumar Mukherjee has bought the shares from a price of 271 rupees. Any outlook on this one, maybe in the short term?
We already sold it at 270 levels. It's a sell.
All right, Raj from Vadodara wants to know about ONGC buy price 269 rupees per share. What should he do with ONGC? What's your take, Kush?
Keep your buying price as your trailing stop loss and hold. This is the resistance zone. Once that is taken out, the stock could head to 295 also.
Okay, Vivek, Swati wants to know amongst Aster DM as well as Indus Tower, any of the stock that you like at this point in time?
Aster DM is better.
Okay, Venkar Ramani wants to know whether it's right to buy a railway stock for a period of 1 year, that is Jupiter Wagon or Titagarh Wagon or any other railway stock. What's your take on that, Kush?
We like Jupiter Wagon in particular. So Jupiter Wagon would be our pick. The levels here would be 345 on the downside, and on the upside we're looking at targets of 415 and 433.
Okay, Vivek, another viewer named Vivek is holding Tube Investments from a price of 2,800 rupees. At this point, good time to book out profits and rather make a switch to stock like CG Power?
I am sure this stock would be in Nifty or Sensex indexes in future.
All right, coming to you once again, Vivek. Ajay Kumar wants to know about J Power. He bought it at 23 rupees per share as a turnaround story. What is the outlook for the next 3 to 6 months?
No, I would avoid.
Okay, Vivek, any view on Adani Enterprise? Anjali from Chandigarh wants to know, is this a good buy at current market price?
Hold it on.
All right, and with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Vivek, as well as Kush, for joining us on the show, giving your views on the power sector as well as resolving all of our related queries. And viewers, if you've not been able to take your query today, please don't be disheartened. We are trying to accommodate as many queries as possible. Now, it's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.